I saw somewhere say that 80% of family offices now hold some sort of alternative investment. So whether it's hedge funds, private markets, crypto, whatever it is. It's part of a natural evolution also as the public markets provide fewer and fewer opportunities. You know, we have this strange confluence of systematic trading, manipulating a lot of flows and price movement.
Hello and welcome to this week's Tea Break. I'm Al-Enazi and as always I'm here with my co-host Yuri. Today we're thrilled to be joined by Matteo Dante Perruccio, Global Head of Corporate Strategy at 3IQ Capital Management. Matteo, how are you?
Very well, thanks. Thanks for having me.
I've heard you've gone for the espresso today, not the tea.
I've gone for an espresso in a PWM cup.
Fantastic.
You know, I have that lifetime habit of consuming various Chinese and Indian teas, and I want to honour our special guest with the Italian coffee drinking culture.
The only problem is that you've done the sin of having that's a cappuccino or a latte after 10 o'clock. That's a verboten in Italy.
Because I'm not used to drinking coffee, because I'm a tea drinker. So it's a natural sin for me to make. But the coffee today is basically to stay awake, because in the night I'm listening to all the goings on in the Middle East. You've seen these kind of conflagrations before, Matteo, because you've been the CEO of Pioneer, of a major asset management group. When these spikes they happened in the past, what would be your reaction to them? I mean, we remember early 90s, the Straits of Hormuz being closed. Do you see that kind of escalation taking place this time round?
If you look at how quick news gets out, and then sadly the conflation of real news and fake news creates problems, right? People are reacting sometimes to false information, not accurate information. I think the general reaction is still the same. Markets don't like uncertainty, right? And so this is not a good thing for the markets. My personal take on it is that nobody wants the closure of the Straits of Hormuz, least of all Iran, for oil revenues. But, you know, when players are pushed into a corner and left with few tools to deal with the situation, it is a possibility. I think we're looking at a real concern around an uptick in inflation, a sell-off in markets, and a move to, I think, safe haven assets like gold and increasingly crypto. You know, digital assets are increasingly looking like a place that people want to put their money.
And Ali, JP Morgan, they were mentioning, you know, the Straits of Hormuz. It's the busiest choke point for the oil transit, basically. And one of their analysts was saying, you know, we could have a $130 Brent crude price. What sort of reactions have you been seeing from the people you've been interviewing, Ali, about how investors should be preparing their portfolios?
At the moment, markets are priced in, geopolitical risk premium. Wealth managers are kind of hedging through energy equities, and as Matteo said, gold and also the shipping as well, but also cautioning prolonged, volatility, which could slow global growth, and as Matteo said, inflation as well could be a risk. The crisis may also accelerate long-term shifts towards energy security. President Trump's been in the news for negotiating, with Israel. At times was kind of getting conflicting news if he's talking to Iran or not. And also the tear-up with his former buddy, Elon Musk, which we have been looking at with Matt Britzman at Hargreaves Lansdown. And he said, despite the hits which Musk's Tesla has taken recently, our contributor still expects the company to be best positioned for monetizing the AI revolution. Matteo, do you agree with this?
Tesla is really no longer an EV stock, it's an AI stock. Kathy Wood of ARK Investments, for example, she's been a big advocate of this view that it's probably the world's largest AI stock, AI play. With the robotaxis, with Optimus Robot, with the AI models, it stands to benefit from this trend of increasing allocation to AI and increasing interest in AI and so on. I mean, he's proven that he can execute on certain strategies when he wants to. I think a lot will depend on how focused he is.
You were in Antwerp last week speaking to wealth managers. What were they telling you?
That kind of swashbuckling certainty which the European wealth managers used to have, it's not there anymore. And they're really talking about three things which is putting their model under threat, and all things we're referring to at the moment. Geopolitics. all of the major wealth managers understand that they've failed to predict all of these major geopolitical disruptions and the market impact. Then they're starting to lose trust from this next generation with this 100 trillion wealth handover. And they're wondering, will they still be investing with us? And tied in with that is the AI and the digital revolution, because they're thinking, this model that we have, is it still relevant? And will our lunch be stolen by the tech companies? Will it be stolen even by the service providers as well, the custodians, because they're gathering so much data? Is that a conversation that you're party to?
The whole change in digital fluency of this generation, right? The new generation is growing up with, it's not unique. Blockchain is not something they're learning. They're living it. They're living with it. They're growing up with it. So they're clearly eyeing opportunities that are different from from the generation previous. It's no longer, you go in and meet the advisor and you don't have any information. I mean, they can go on to an AI bot and ask 5 best provider of private market funds in the world and what their track record's been, and in 2 seconds, they've got it. That wasn't available before. At the same time, though, those tools are also available to financial advisors. If they're clever and smart and open to it, they have a whole host of tools that they never had before to increase their viability. And I think there's still a place for human guidance and interaction in those conversations. Money is a funny thing. Wealth is a funny thing. People still want to have someone to look across the table and look into their eyes. So I think if they evolve, like the market's evolving, there's a place. I think if they sit in their old ways and just keep doing 60-40 models and doing model portfolios, I think it's probably game over.
Talking to the likes of Hannes Hoffman, who's the head of the Global Family Office Group at City Wealth, he tells us that the family offices are very interested in high conviction secular growth areas such as education, healthcare, AI, and infrastructure through investing in private assets. Does this match your experience, Matteo?
I saw somewhere say that 80% of family offices now hold some sort of alternative investment. So whether it's hedge funds, private markets, crypto, whatever it is. It's part of a natural evolution also as the public markets provide fewer and fewer opportunities. We have this strange confluence of systematic trading, manipulating a lot of flows and price movement. People feel we need to look elsewhere for real return opportunities. And those are increasingly in the private markets, they're increasingly in the digital asset markets and hedge funds. If I were to compare it to 15 years ago, it was a really marginal conversation talking about private markets or private credit or anything. Now it's at front and center in any conversation you have with a family office or a wealth manager.
You mentioned the old 60-40 portfolio earlier on, and we remember that, that was the gospel that the business schools were teaching. Harry Markowitz, the efficient frontier. Here's a graph. Here's how much you put in equities. Here's how much you put in bonds. It was very systematic. Do you think that old model, it's the so-called modern portfolio theory, has very much been consigned to the history books now?
And you've been around a while, 35 years in asset management, I would never declare death and any, fundamental concepts. I think the concept still exists in its broader sense. I think we're now looking at maybe 50, 30, 20. Probably 50 equities. There's an increased correlation between bonds and equities, so that's a problem. And then you have that 20%, I think that's becoming a core, that 20% of alternative allocation, that's private markets, that's digital, that's all of these other assets that I think have greater return probabilities than many of the public markets do.
And one concept that I'm delighted hasn't yet totally died a death is the flamboyant tie, which you're sporting today. And sadly, Ali and I haven't matched you with that. But I think that next time, look deep in our wardrobes and dig out a few of the pages.
It'll look like a vintage broadcast with people in ties.
I hope so.
We've got to take some tips from you. Matteo, thank you so much for joining us.
Thank you very much for having me. It's a pleasure.
That's it from us for now. Don't forget to catch our weekly episodes on the PWM website or our YouTube channel. And if you've got questions for our guests or just want to dive deeper, you'll find everything you need online. See you next week.